Good evening, students. I welcome you all in our tax class. Today, we will be discussing the provision for return filing and self-assessment tax. So, I believe that you all are studying very hard to achieve the goal of your life to become a CA as soon as possible. So, let me check the chat box. Good evening, Shagufta. Good evening, Soumya. Good evening, Pawan. Good evening, Vishnab Shri. Good evening, Almas. Asta is having some query regarding TDS. Sir, Section 194M will be applicable if individual or HUF having more than 1 crore or 50 lakh, but for personal purpose, as in that case, 194J will not be applicable. No. Section 194M says that this section is applicable for those pair not covered under Section 194J. So, because this pair whose turnover is exceeding 1 crore of 50 lakh rupees is covered under Section 144J. So, if under Section 144J that individual or HUF is paying for personal purpose, then it does not mean that because 194J is not applicable, so 194M would be applicable. No, because the person category, if exceeding 1 crore 50 lakh, has been included under Section 194J. So, if in any case 194J is not applicable due to any exemption, etc., it would not applicable under Section 194M. Okay, so 194M would not be applicable on this case. Asta is asking, sir, in 194BB, more than one horse race means the concept of Section 194BB says those horse race on which wagering and batting is allowed. It could be a single race, it could be a multiple race in the same event. So, in both cases, Section 194BB would be applicable. In Section 194G, there is one time payment or aggregate we are considering in financial year. We are considering aggregate when the payer and pay is same. Sir, in 194P, specified bank has to deduct income tax, 87A, deduction, then balance left. If that is above basic exemption limit, then TDS in that, say, if it is come 5,10,000, after all deduction, then TDS will be 10,000 multiplied by 20%. In that case, if that is a case of super senior citizen, in that situation, it would be 10,000 multiplied by 20%. But if it is not a super senior citizen, then we have to calculate tax accordingly as a normal senior citizen. In that case, up to 3 lakh is free, balance 2 lakh is going to be charged at the rate of 5%, and balance would be at the rate of 20%. In LRS, if it is 8,40,000, then TCS will be only on 140, and in case of overseas on 7 lakh, 5% and 140, 20%. What is this question? I'm not understanding you. This question after just a second. In LRS, liberalized scheme system of TCS, the limit was 7 lakh. So what exactly your question is? You are asking the TCS would be on 140. So is it a same question you are asking in 3 parts, or these are 3 separate queries? If you are asking for LRS case, so in case of LRS, in case of remittance, no TCS up to 7 lakh, exactly. So on 150, there would be a TCS. I am confused that in the second part, you are asking in case of overseas on 7 lakh, 5% and 140. Okay, that's a separate question now you are asking. So overseas tour package up to 7 lakh, it would be 5%, and on balance, it would be 20%. Accurately, correct. But in case of LRS, you have to find out whether it's for education purpose or in which category A or B it is falling. Then we will decide the rate of TCS. Hello, good evening. Soumya, good evening. Sahil Kumar Rana, good evening. Very, very good evening to all of you. Harsh Kaur, good evening. So we are going to discuss the provisions of return filing, etc. So we have covered chapter 1 to chapter 7 right now. And this is our chapter number 8, the filing of return, etc. And then we have the last topic, that is computation of total income and tax thereon. So you can see in this chapter, from chapter 1 till chapter number 7. In chapter 1, we have completed basic concept. Okay, tomorrow is our first revisionary class for basic concept and residential status. So I have a request to all of you that kindly revise those chapters, because in tomorrow class we will going to solve almost 25 questions from your RTP, MTP, etc. So you should revise those provision, because the main concept of taking the revisionary class is on the focus of solving question, the practice session. So please go once and revise all the provisions of basic concept and residential status. So in these chapter 1 to 7, the basic concept, residential status we have covered, then 5 heads of income, then those clubbing provisions, set of provision, etc., TDS, advanced tax. And chapter 9 is the summary of all these calculation part, in which we will see how to compute total income and tax thereof. When there's a single question, which includes all heads of income, deduction, TDS, there could be applicability of residential provisions also, etc. So we can say all these topics, whatever we have covered from chapter 1 till chapter 7 and then 9, is the calculation part which have to be done by assessee or via his consultant, whether a CA, CS, financial consultant, etc. Suppose there is a assessee individual, Mr. Ram, who earn income from business, capital gain, income from other sources, etc. So chapter 1 till chapter 7 and chapter 9, this is the part which needs to be done on the behalf of Mr. Ram by himself or with the help of his consultant. So he will calculate the total income and deduction and the other provision, and then finally will calculate his tax liability. So these all chapter talks about the declaration which he needs to give to the income tax department. So before that declaration, he needs to calculate his income and the tax liability upon it. The chapter we are going to cover today is chapter 8, which talks about the filing of return of income. So what is filing of return of income, or what is exactly the meaning of return of income? The return of income means technically the declaration by assessee regarding his gross total income and then his total income and the tax calculation. So whatever we have done or whatever we have gone through from chapter 1 to 7 and chapter 9, what we will cover after this class, the whole calculation part needs to declare to the income tax department. And chapter 8 talks about it. Chapter 8 says that you have to declare your liability to income tax department in the specified form, in the specified manner, at specified date, etc. So this chapter is going to discuss those topics in which an assessee needs to declare his income tax liability in the specified manner, at specified date, in the specified forms, with the specified information, etc. So this is a theoretical chapter technically. That's a good news that this is pure theoretically chapter, we can say, in which we have to discuss the provision regarding who to submit PAN number, what is the requirement of Aadhaar number, when we need to file our income tax return, what is the due date of filing of income tax return, what is the last date of filing of income tax return, who needs to file income tax return, etc. So one by one, we will go through all these topics in this lecture. Okay. So now let's discuss these provisions. With the help of notes. So this is our chapter number 8, provision for filing return of income and self-assessment. I have already uploaded the notes, so you can download it. Probably you must already have been downloaded. Okay. So income tax return filing provision. Chapter overview, what kind of provision we are going through in this topic is filing of return of income topic, in which there are multiple types of returns, compulsory filing of return of income. That means in our country, what are those category of person who needs to file income tax return? So we are almost 140 crore plus. So out of these 140 crore plus person, who needs to file his income tax return? Whether you are required to file income tax return, whether do I need to file my income tax return or not, that would be explained. Then return of loss. We have gone through with a chapter that was set off and carry forward of losses. So if you do not have any income, but you are suffering from loss, so do you need to file your return of loss or not? And what is the advantages or what is the disadvantages? Then we have a concept of belated return, just like a belated happy birthday. If you do not able to file your return on due date, if you file your return after due date and before last date or up to the last date, that would be called your belated return. Then we have a concept of revised return also. So government has given you an opportunity that if you have filed your return of income or belated return, it could be revised if there is an omission or mistake. And if you want to revise it, you can revise it. What is the last date, etc. That we will go through. Okay. Then updated return also a concept. Even after the last date of filing of return, if you want to update your return, so that option also exists for next 2 years. So you might be thinking that looks like similar to revised return, but there is some basic difference between filing a revised return and a updated return. So what are those differences, etc.? We will discuss those topics. Then there are interest and fees for default in furnishing return of income. So we have gone through with section 234B interest and 234C interest. So who will tell me the logic of applying 234B interest and why we apply section 234C interest? Can anyone explain me in short when section 234B interest applicable and when section 234C interest is applicable? We have gone through with this provision in the last chapter. Yes, Asta, under section 194P, income tax also to be deducted first and all deduction. Then if balance, if it is exceed basic exemption limit, then we need to apply the TDS. Illustration 7, page number 7.35. 7.35. Pawan is asking, was that? That's for TDS, I guess. Okay. So what is the answer of this? Section 234B and 234C, who will tell me? Krishna Shah is saying advance tax payment defaults and difference in deposit. That is the applicability. You are not telling me actually the applicability. You are just telling me the reason for imposing it. When interest under section 234B is applicable in case of advance tax, if your advance tax is less than 90% of your assessed tax on the last date of advance tax deposit. So if this happen, 234B interest would be applicable. And what is the reason for applicability of section 234C? Yes, Krishna Pri is correct. If total advance tax paid is less than 90% of, not advance tax, assessed tax, okay? Under 234B, I'm not asking Tanu the rate of interest. I was just asking the applicability part. 234B is applicable when advance tax is paid less than 90% of assessed tax. Neeraj is saying, okay, I have given you two questions also regarding advance tax and 234B and C interest calculation. So have you tried that? You are able to solve those questions? Shortfall in depositing estimated tax. Yes, Miss P, correct. 234C is applicable when you are not able to deposit. when you are not able to deposit the required amount of estimated advance tax on the specific dates. So there are specific dates on 15th of June and the percentage. So the percentage was 15%, then 45%, then 75%, and then 100%. But on the first date, if you deposit your advance tax less than 12%, then 234C would be applicable. And on the second date, if it is less than 36%, then it is applicable. On the third date, it's same 75%. On the last date, if it is less than 100%, then 234C is applicable. But you might be thinking it's B and C. So where is section 234A? Interest. So 234A interest for default in furnishing return of income under section 234A. So if you do not file your return of income up to the due date of filing, then interest under section 234A is applicable. So 234A is for late filing of return of income. It does not have anything with section 234B and C. B and C for advance tax default, and 234A is for default in furnishing of return of income. So how we need to calculate 234A interest, that is going to be discussed also. Then there is a fees also. If you file your income tax return late, there could be a fees of 1,000 or 5,000 in different situations. What are those cases that we are going to discuss? And there are some miscellaneous provisions also regarding your PAN number, Aadhaar number, etc. That also we are going to cover in today's class. Moving on further, return of income. So the first and very important question that must be in your mind, that would be who is required to file income tax return in our country, and what is exactly the income tax return is for. So as we discussed, income tax return is for declaring your income tax liability to the department. And then after declaration of your liability, department will assess it. So technically, there are three stages of income tax. There are three stages of income tax. The first one is declaration of liability. So assessee will calculate his income and tax, and in a specific form, a specified date, he is going to declare his income tax liability. The second stage is assessment of liability. So whatever income you will declare to the income tax department is going to check it, whether it's correct or incorrect. That is going to be dealt at final level. And after assessment of liability, there is third is called recovery of tax. So you declare your tax, department will check that is it correct or incorrect. And the third is the result of the second stage. If department feels that it is not accurate, they can ask you to pay more tax. If you have paid excess tax, they are going to refund it. And if it is everything is equal, then there would be no such action. So recovery of tax is the result of assessment of liability case. So the Income Tax Act 1961 contains provision for filing of return of income. Return of income, what it is return of income? It is the format in which the assessee furnish information. That's a kind of a, you can see, self-declaration regarding its total income and tax. The format of filing of returns by different assessee is notified by CVD. The particulars of income earned after heads, GTI, deduction, GTI, total income, tax payable, generally required to be furnished in a return of income. So whatever calculation you have done at your part, you have to submit each and everything to the income tax department in a specific format. So you have gone through with the specific format of income from house property that we have to calculate GAV, AB, etc. Exactly the same calculation we have to submit under this declaration. So there is a specific form in which those all heads has been written over there, whatever we have gone through. So if you are a salaried person, then there's a format in which you have to put in basic salary, how much basic salary you have earned. Then in the form, there is specific information regarding each allowances, perquisite, terminal benefit like gratuity, etc. if applicable. If that's a business you are doing, then you have to calculate your profit as per accounting. Then you have to allowed expenditure, disallowed expenditure, disallowed income, allowed income, depreciation as per income tax. You have to do each and everything. So whatever calculation you have gone through, the format is there. If you have any capital gain, then there is capital gain for movable property, immovable property, separate heading in format. You have to select which is your building, immovable or movable. Then you have to click what's the sale consideration, government value, higher as per section 50C, your cost of acquisition, your indexation, etc. So whatever you have gone through in the specific format, you have to fill all those detail exactly the way we have calculated it. In short, a return of income is the declaration of income and the resultant tax by the assessee. So it does not mean whatever you are declaring is correct. After your declaration, the second stage is assessment of liability, in which department will verify, or they can ask for other records, etc., for the purpose of verification that whatever information you have submitted, whether is correct or incorrect. That part is going to be dealt at finally. Is return filing is mandatory? Now we need to see in our country who is required to file income tax return. Compulsory filing of return of income. As per section 139(1), it is compulsory for companies and firms to file a return of income or loss for every previous year on or before the due date in prescribed form. So if you are a company or a firm, you have to file your income tax return every year. It is mandatory, whether it's an income or loss. Then in case of a person other than a company or a firm, that means individual, HUF, AOP, BOI, etc., filing of return of income on or before the due date is mandatory if his total income, remember carefully, if his total income or the total income of any other person in respect of which he is assessable. So if your income, or if you are a deemed assessee technically, or any other person for which you are assessable as an assessee, if his income exceeding the specified basic exemption limit, in that case you have to file the income tax return. Suppose Mr. A, his income is only 1 lakh rupees, which is not exceeding the basic exemption limit. So he is not required to file his income tax return. But suppose he has a minor child and his minor child income is 10 lakh rupees via his talent or skill. So it cannot be clubbed. So suppose his minor child is having income of rupees 10 lakh rupees via talent, etc. So minor child cannot file their return themselves. So as a deemed assessee, Mr. A needs to file the return of minor child also. So in that case, the liability of filing return of income is upon Mr. A. One more example. Suppose there is Mr. Ram who was carrying a business. The net profit of that business was 10 lakh rupees till February 2025. After that, Mr. Ram has been passed away. Now, his son, as a legal heir, succeed that business. So now, whatever income Mr. Ram has been earned, that is 10 lakh rupees, that is going to be assessed in the hands of the legal heirs. So his son needs to file his income tax return as a deemed assessee on behalf of Mr. Ram. So if your income or the income of that person, so if your income or the income of the person for which you are assessable under this act as an assessee exceeding the basic exemption limit, then you have to file income tax return. Clear? So in case of company and partnership firm, you need to file income tax return always. Other than a company or a firm, you have to file income tax return if your income, total income, or the total income of any other person in respect of which you are assessable. In that case, you have to file the income tax return. Suppose there is a person who's not mentally stable and he's earning some income and you are the guardian of that person. then in that situation, you have to file the income tax return. Suppose there is a trust and you are the trustee. So the trustees needs to file the income tax return of the trust. So that would be the case in which you have to file income tax return if it exceeds the basic exemption limit. So if you are opting for default tax regime, the basic exemption limit is 3 lakh. So if it is exceeding 3 lakh, you have to file income tax return. If you are not opting for default tax regime, the basic exemption limit is 2.5 lakh or 3 lakh or 5 lakh, depending upon the case. So if it exceeds those limit, you have to file the income tax return. The third case, every person being a resident and ordinary resident. We are talking about resident and ordinary resident in India. So you all are ROR. So apply this provision upon yourself and analyze whether you are need to file income tax return or not. So you are not a company, you are not a partnership firm. And I am also not a company, not a partnership firm. So we do not need to file income tax return as per point number 1. As per point number 2, my basic exemption limit income is higher than my basic exemption limit. So I am falling in point number 2. So I need to file my income tax return. But might be you all does not fall in this category. Point number 2 category. Your total income does not exceeding 3 lakh or 2.5 lakh rupees. So you do not need to file income tax return till now. But the third point may be the point in which you could be included. Because you all are resident and ordinary resident. Now what the third point says, listen very carefully. Every person being a resident and ordinary resident in India. You all are resident and ordinary resident. Within the meaning of section 6.6, who is not required to furnish a return under above point number 1 and 2. You does not fall in category 1 and 2. Would be required to file a return of income. So if you are a ROR and you do not have income exceeding the basic exemption limit, even you need to file your income tax return or the loss return for the previous year in the prescribed form, verified in the prescribed manner on or before the due date. So this would be a same language which is going to be repeated again and again. That you have to file prescribed format, you have to file that a prescribed date, verified in prescribed manner, if you fulfill any of these conditions. So if you do not fall in category 1 and 2, if you are a resident and ordinary resident, and if you fulfill A or B condition at any time during the previous year, any time means even it for a single day. Now apply this condition upon yourself. If you hold as a beneficial owner or otherwise any asset located outside India. So if you are the real owner of any asset which is located outside India or has a signing authority in any account located outside India. So if you are maintaining a bank account outside India and you are having the signing authority, or if you are having any asset outside India, then even you do not have any income, you do not fall in point number 1 or 2. You have to file a income tax return in India. If you are the beneficial owner means real owner. Fine. Or if you are a beneficiary, you are not a real owner, but you are getting the income like a trustee, like a trust. If you are getting, you are a beneficiary of any asset because you're not the owner, but the income from any asset you are receiving or the benefit from that asset you are receiving. In that situation also, you have to file your income tax return in India. However, an individual being a beneficiary of an asset located outside India would not be required to file income tax return under this clause, where the income. For second point, this point correlated. Suppose there is any asset which is located outside India. Suppose there is a house which is in, suppose, UK. Clear? And Mr. A is in India. So if suppose Mr. A is the beneficial owner of this house, whether he's receiving any income or not, but if he's a owner of this house, he will fall in category 1. He has to file his income tax return. Now suppose A is not the owner of this house, the owner is B. But the income of this house is receiving by Mr. A because he's the beneficiary of this house. In that situation, because if the income is receiving by Mr. A, So whatever even the income amount, Mr. A needs to file his income tax return in India. Now this provision says if this income is not included in the hands of Mr. A, this income is included in the hands of Mr. B or any other beneficial owner, not in the hands of Mr. A. A is the beneficiary, but the income is not included in the hands of Mr. A. He is not receiving that income yet. In that situation, he does not need to file income tax return. So, however, an individual being a beneficiary of any asset located outside India would not be required to file return of income under this clause, where that income, if any arising from such asset, is includable in the income of the person referred to in A. So if the income is included in the beneficial owner hand, then beneficiary need not to file his income tax return. What is the exact meaning of beneficial owner and beneficiary has been given over here. You can read it, general provision. So the chart describe who needs to file income tax return in short. So the company and the firm need to file always. Point number 3 has been described in the form of chart. If you are a ROR, those are not covered in point number 1 and 2. But at any time during the previous year, if they are beneficial owner or having a signing authority, or if there is a beneficiary, in that case, they need to file the income tax return. For the purpose of beneficiary, this exception is there that if income does not include in the hands of beneficiary, but if it has been included in the hands of beneficial owner, then return is not required to be filed by that beneficiary. Okay. So 3 points we have discussed. First was partnership firm and a company. Second was basic exemption limit. Third was the beneficial owner and beneficiary case. Nidhi is asking ROR means resident, ordinary resident. Yes, Nidhi, exactly. That's the meaning of ROR. Now, fourth point is for categories. It says every person, being an individual or a HUF or an AOP BOI, whether incorporated or not, or an artificial judicial person. These category of person has been included for the fourth category. So we are still discussing the case in which return is required to be filed mandatory. The case first was company and firm. We have discussed it. Second was if other than company firm, your income is your total income. That means after deduction, exceeding basic exemption limit after deduction, because the word has been used total income. The third point was beneficial owner and beneficiary. If asset outside India, signing authority outside India, or having beneficiary interest from any asset held outside India. Now the fourth point. This is for individual HUF, AOP, BOI and artificial judicial person. That means for those persons, slab rate is applicable. Now what the point says? The point says, just a second, there is some problem in this sheet, I guess. Okay. So the point says, whose total income or the total income of any other person in respect of which he is assessable. Again, the same thing, but something has been changed. If you see it closely, you will see something is going to be changed in this case. The provision says that if you are an individual HUF, AOP, BOI and artificial judicial person, and if your total income or the total income of any other person in respect of you are assessable under this act, without giving effect to the provision of chapter 6A deduction. That means section 80C-80U. Point number third was talking about technically the TI. If your TI exceeding basic exemption limit, and if you will see now what it is saying without giving effect to the deductions. So that means now they are not considering TI. Now they are considering GTI. Now you have to see if your GTI is exceeding the basic exemption limit, you have to file your income tax return. And it's not end over here. GTI And it has been also excluded section 54, 54B, 54D, 54EC, 54F. So now what exactly they are saying? They are saying whatever is your total income, kindly add back all deduction in this total income, 80C to 80U. Then add back section 54-54F, exemptions, what we have discussed in capital gain. So add all deductions, add section 54 till section 54F, exemption. After that, if this amount is exceeding basic exemption limit, then you have to file your income tax return. So technically, if you'll see, point number 2 is irrelevant now, because point number 2 was talking about total income. And this new point number 4, it was not earlier there, it has been inserted like 3-4 years back. So after including of point number 4, to some extent, point number 2 relativity has been, I guess, wasted. Because now you do not need to check the total income in point number 2, even if your total income is not exceeding basic exemption limit. But suppose after adding these things, if your basic exemption limit exceeding, your income exceeding the basic exemption limit, then you have to file income tax return. Let me show you how. Suppose you are applying for optional tax regime. Your GTI was 5 lakh rupees. Clear? You have deductions under section 80C-80U. Total deduction was suppose 3 lakh. So now your total income is 2 lakh rupees. So the basic exemption limit would be 2.5 lakh. So if as per point number 2, I will ask you whether this individual needs to file income tax return, the answer would be no. Because the total income does not exceed the basic exemption limit. But now as per point number 4, what we need to do? The total income, you need to add back the deductions if any has been claimed. So now I will compare the basic exemption limit with this value. So because it is exceeding, so yes, he has to file the income tax return because that kind of person is going to fall in category number 4. So technically category number 2 is not relevant nowadays because category 4 automatically is going to include those cases, those even escaped from category number 2. One more example. Suppose your capital gain was 10 lakh and you have claim exemption under section 54 was 8 lakh. So your capital gain income suppose was 2 lakh rupees and this is the only income you have. So this would be your GTI. 2 lakh was your GTI. Suppose 80C deduction was 50,000, 0.50 lakh. So your TI would be 1.5 lakh. Again, it's not exceeding your basic exemption limit. As per point number 2, you do not need to file your income tax return. But as per point number 4, now you need to add back this. So that would be 2. And you need to add back the 50 for exemption also. So now as per point number 2, your income would be considered tax 10 lakh rupees. And because it is exceeding your basic exemption limit, so you have to file your income tax return. Understood? So point number 4 is technically more wider than point number 2. So he is required to file his income tax return of such other person on or before the due date, etc., etc. Now, the basic exemption limit for the purpose of default tax regime, it has been explained over here, it's 3 lakh rupees. And for default tax regime, only 3 deduction you can claim, 80CCD, 80CCH2, 80JJAA. Okay, this is for employer contribution for NPS scheme, this is for Agniveer scheme, and this is for new employees appointed. In that case, you can claim 80JJAA. And exemptions. So you have to add back 3 deductions and these exemptions. If it is an optional tax regime, then you have three kinds of basic exemption limit, 250, it could be 3 lakh, it could be 5 lakh. You have to add back all deductions and all those section 54, 54B, D, E, C or F to find out that amount on the basis of which you will decide that you have to file your income tax return or not. So that was point number 4, but it is not yet completed. We are still reading compulsory filing of return of income. Now we are having point number 5 also. Now point 5 says if you do not fall in the above 4 categories for filing of your income tax return, but if during the previous year you fulfill any of the below condition, you have to file your income tax. Now what are these conditions? So these are point number 5. And if you do not fall in above 4 categories, but you do fulfill any of these conditions, you have to file your income tax return. Has deposited an amount or aggregate of the amount exceeding 1 crore rupees in one or more current account in a bank, etc. Incurred expenditure on foreign travel exceeding 2 lakh rupees. Fine. Incurred expenditure on electricity bill. If your electricity bill of your house is exceeding 1 lakh rupees, that person, in the name of which person the housing bill is generating, needs to file his income tax return, other prescribed condition which government can prescribe time to time. So other than a company or a firm who is not required to furnish a return of income section 139(1) and he fulfills, still the provision continues. So these were A, B, C, D 4 condition. We are having some more condition also. Even if you do not fall above condition, but if you fall in these condition, you have to file your income tax return. So we are having 4 more condition also. If you are running a business and total sale or turnover of the business exceeding 60 lakh rupees, you have to file your income tax return. If you are carrying a profession and your receipt is exceeding 10 lakh rupees, you have to file your income tax return. If the aggregate of TDS, TCS in the previous year exceeding 25,000 rupees or more, if TDS, TCS is more than 25,000, you have to file your income tax return. If you are a resident individual, age 60 years or more, then this limit would be 50,000 or more. If you deposit in your saving bank account, in the above there was current account, 50 lakh rupees or more in the year, then you also need to file your income tax return. So these were the cases in which you need to file your income tax return. Point number 6 says now it is ended. The compulsory filing of return of income cases has been over. So if you file in any of these category, point number 1, 2, 3, 4, 5, then you have to file income tax return in the prescribed manner, in the prescribed form, at the prescribed time, verified in the prescribed conditions. So all such person, those fall in category 1 to 5, on or before the due date, furnish a return of his income or the income of such other person for which he is accessible, of course, as the specified particulars, specified manner, etc. Now, we have discussed that those category of person required to file income tax return. So in future, if anyone is going to ask you, whether your relative, your friend, etc., that do I need to file my income tax return? So you have to check all these point number 1 till point number 5. If that particular person does fall in any of these categories or in any of these points, the answer would be yes. If that person does not fall in any of these categories, the answer would be no. You can apply this point or these point upon yourself, on your family member, etc. If any condition has been satisfied, you can tell them that you need to file the income tax return, else no. There is a very common general misconception. Generally, people think that if you have a PAN card, if you having a PAN number, you have to file an income tax return. Now, this general misconception must be cleared in your mind. Because in these 5 categories, we did not read any point in which it has been written that if you have a PAN number, you have to file an income tax return. No. And let me tell you, these are the mandatory case. You can file your income tax return voluntarily also. Even if your income does not exceed the basic exemption limit, it does not mean that you cannot file your income tax return. Voluntarily, you can file an income tax return in any case. But these are the compulsory cases in which you have to file your income tax return. Second क्या है लिखा हुआ? Nidhi is asking. I don't know what you are asking, Nidhi. Tanu is asking, in this case, what tax we need to pay? That's a different case. Tax is required to be paid is a different scenario. The filing of return is mandatory. Even if suppose your electricity bill is exceeding 1 lakh rupees and your income is only 1.5 lakh rupees in the year, then you have to file that declaration. Income tax department says you have to file your declaration of income to us. Whether it's taxable or not, it's a different thing. But you have to file your income tax return. Tanu is saying, conclusion, everyone needs to file their return. No, you must not be included. I believe you might not be included in this category. So not everyone, those fulfill these category. Government includes those high transaction case. If somebody is paying more than 1 lakh rupees electricity bill and his income is not exceeding basic exemption limit, so department will think how it's possible. If somebody's expense on foreign travel more than 2 lakh rupees and did not file income tax return, so department just need to check it out. Okay. Mohammed Farhan is saying, if any person has two houses and one shop and electricity bill from these aggregate exceed 1 lakh, then filing it is compulsory. Yes, we have to see the person who is paying. It is not house-wise, it's about the person-wise. So if the bill is in the name of same person of 5 separate houses or shop, it does not matter. If the aggregate you are paying more than 1 lakh rupees for electricity consumption, you have to file income tax return. पॉइंट नंबर 3 पेज नंबर 8.4 हिंदी में एक बार समझा दीजिए सर. पवन इज सेइंग, पवन हिंदी कैसे बताऊंगा? 8.3 ओके, बेनिफिशियरी. देखो पेज नंबर 8.4 पे पॉइंट नंबर 3 पवन ये कहता है हिंदी में कि अगर आपको रिटर्न फाइल नहीं करनी है पॉइंट नंबर 1 और 2 के अंदर, आप फॉल नहीं करते. लेकिन अगर आप एक रेजिडेंट है, ऑर्डिनरी रेजिडेंट समझते हैं ना, चैप्टर नंबर 2 वी हैव डिस्कस्ड. तो अगर आप एक ऑर्डिनरी रेजिडेंट हैं और इंडिया के बाहर आपके नाम पर कोई प्रॉपर्टी है, आपके नाम पर बाहर कोई प्रॉपर्टी है, कोई घर है, जमीन है इंडिया के बाहर, तो रिटर्न फाइल करना पड़ेगा. या प्रॉपर्टी नहीं है, इंडिया के बाहर आपका एक बैंक अकाउंट है जिसमें आप साइनिंग अथॉरिटी है, तो भी रिटर्न फाइल करना पड़ेगा. इंडिया के बाहर आपके नाम में प्रॉपर्टी नहीं है, ना कोई अकाउंट है, बट इंडिया के बाहर कोई ऐसी प्रॉपर्टी है, ऐसी कोई एसेट है जिसके आप बेनिफिशियरी हैं, जिससे आपको इनकम मिलती है, तो भी आपको रिटर्न फाइल करना होगा. लेकिन अगर आप बेनिफिशियरी हैं उस प्रॉपर्टी के जो इंडिया के बाहर है, जो आपके नाम में नहीं बट उससे आपको इनकम मिलती है, लेकिन अगर वो इनकम किसी दूसरे बेनिफिशियल ओनर के नाम में ऐड हो रही है, किसी और के नाम में टैक्सेबल हो रही है, तो फिर आपके नाम में उस इनकम को ऐड नहीं माना जाएगा, आपको रिटर्न फाइल करने की जरूरत नहीं. ये था पॉइंट नंबर 3. ओके. ईयरली साहिल, इट्स नॉट 1 lakh rupees per month, it's yearly 1 lakh rupees consumption in yearly. Okay. Now meaning of due date we are going to discuss. Due date means the date which is the correct date. If you do anything up to the due date, the right date, the best date, you need not to pay any interest or late fees. So let me tell you, result has been already declared for CA inter, final, etc. And now we need to file examination form. So there are always 2 dates for examination form. One date is that is without late fees. So the date for examination form would be the date without late fees. Okay. Suppose the without late fees, the date is 15th of, suppose, okay, 15th of July 2025. And the second date with late fees of suppose 500. is 22nd of July. So we will call the first date is a due date. So due date means the date which is required without any late fees and interest, etc. But it is not the last date. So I'm just trying to explain you the difference between the due date and the last date. So due date is the date, the right date, the correct date, the best date. If you do anything till due date, you need not to be accused for any penal provision. No penalty, no interest. But that does not mean that if the due date has been expired, you cannot do that thing. That would be called the last date. But if the work has not been done till due date, then you need to pay interest, etc. But you must have the last date. So we are discussing the due date in case of filing of return of income. It is 31st October of the assessment years. That means it is 31st October 25. For those where the assessee other than an assessee referred to in point number 2 below. So it is 31st October other than an assessee who is referred to in point number 2. So if you do not fall in category number 2, the last date of filing, the due date for filing of return of income for a company would be 31st of October. A person other than a company whose accounts are required to be audited, the date would be 31st October. If you are a partner of a firm whose accounts are required to be audited under the Income Tax Act, even in that case, for those partners, the date would be 31st of October. Let me explain you separately this point. So there are technically 3 due dates for different category of person. The first is 31st of July 2025. The second would be 31st October 2025. Third would be 30th November 2025. So if you are a company, the due date for filing of return of income under section 139(1), the due date would be 31st October always, if you are a company. If you are not a company, other person other than a company, whether it's a partnership from individual, etc., anyone. But you have to go for your audit. You must have gone through with section 44AB, the organization who needs to conduct their audit under PGBP provision. So if the audit provision is applicable upon you, then the date would be for your case would be 31st of October. The third category, suppose you are an individual and audit provision is applicable upon you, the date would be 31st October. Suppose you are a partnership firm and you fall in audit case, the date would be 31st October. Now third point is connected with partnership firm case. Suppose there is a partnership firm XYZ and company and this falls for audit case. So the ITR date, the income tax return filing due date for this XYZ and company would be 31st October 25. Okay. But it says all the partners also. If you are a partner of a partnership firm whose accounts are required to be audited. So if your partnership firm return filing date is 31st October, then automatically all partners date would automatically be 31st of October. So if your partnership firm date is return filing is 31st October, all the partners of that firm automatically date would be 31st of October. Okay. If you fall under a specific transaction, international transaction, in which there is section 92E case is applicable. In that case, you have to file your return of income till 30th November 2025. Except this category B and C. Suppose this is B, this is C. All other cases, category A says other cases B and C. All other cases, due date would be 31st of July. So can you give me some example in which case A case would be applicable? For those category of person, 31st July would be applicable. Kindly give me one or two examples. Nidhi is asking black क्यों हो जा रहा है? I don't know. कुछ शायद sheet में problem है. I will open a separate sheet, so don't worry about it. Okay. So kindly tell me example of one or two categories for those person who will fall in July date. Okay, there are some answers. Very good. Salary person, absolutely correct. If you're a salaried person, the date would be always 31st of July. Salaried person, Tanu is saying salary income. Miss P is saying individual AOP, BOI, HUF. No, it's wrong answer. If that individual, I have written over here, individual could fall in this category also. If that individual is having audit case applicable, then 31st October would be applicable. Person having income from salary, house property, we can say. Business person, Soumya Lodha, would be applicable when that business does not require audit. So suppose an individual, partnership firm, AOP, BOI, etc., they are carrying a business activity, but they do not fall in audit case. So in this case, all salaried person would be fall. All salary, or we can say person do not have business income. If you do not have business income, you will fall in always category number A. Even if you are carrying a business, but no audit case, then also 31st July would be applicable in that scenario. Okay, tell me, upon me, which date would be applicable? 31st of July or 31st of October? What date should be applicable on my case? In my case, I would be falling 31st July or 31st of October. Let me see who will give me the correct answer. Mr. Ishan is saying 44 AD, ADA, AE if given presumptive. All cases, Ishan, if you do not fall in audit case, that would be automatically 31st of July. Whether presumptive case, normal case, does not matter. Okay, Mr. Somesh is saying 31st of July for my case. Okay, Mr. Somesh. Let's see more answer. Kesapuram is saying 31st of July for my case. Very good. Nidhi is saying 31st October. Okay, well done. Almas is saying 31st of July. 31st October is Sahil is saying. Priyanshi is saying. Okay. Soumya is saying 31st July. Very good. Tanu is saying if you are in practice 31st of July. Yes, I am in practice. So Tanu is saying 31st of October in that case. Yash saying 31st October. Krishna is Shri saying 31st of July. Sunil is saying 31st October for profession. And let me tell you, only one student gave the correct answer. That was Priyanshi yet. 30th October तो कोई date ही नहीं है पवन. 31st October. Mohammad Farhan also gave the sir, if you are practicing CA and your account required to audit, then 32nd October. Mohammad Farhan also gave the correct answer. This is, you cannot answer this question. Why don't you understand, student? There is not required to always answer the question. You have to understand the question first. I am an individual. You do not know whether I fall in audit case or I do not fall in audit case. So how you can say I would be fall in 31st of July or 31st of October? You have to ask me first. The correct answer would be like this, sir. If you fall in audit case as an individual, then 31st of October. If you do not fall in audit case, then you would be in 31st of July. That answer given by two students, I guess, Priyanshi and Farhan. Well done. But if you are directly giving me answer July, October, that means you does not understand the provision yet. कोई कसम नहीं खाई है हम लोगों ने कि क्वेश्चन सुनते ही बस आंसर ही बोलना है. You have to understand the question first. How can you define that I would fall in July or October? it will depend upon whether I fall in audit category or not. Understood? So please understand the question first before giving any answer. Okay? Chalo. So that was section 113.19 due date. So you can go through it 30 November for those who falls in 92E. That would be discussed at final level. Do not worry. 92 is not covered. The scope of syllabus of intermediate paper. And 31st July is for those category. Those do not fall in 31st October and 30th November. So illustration number 1, we are going to discuss. That was question number 1 we are going to discuss. Illustration 1. Paras, age 55 years, is a resident of India during the financial year 24-25. Interest of 2,88,000 was credited to his NRE external account with SBI. 30,000 being interest on a fixed deposit with SBI was credited to his saving bank account during this period. He also earned 3,000 as interest on saving account. In Paras required to file return of income. What will be your answer if he has incurred 3 lakh as travel expenditure of self and spouse to US to stay with his married daughter for some time? So it's a very simple question. Till here, if you will see, NRE interest is going to be exempted under chapter income from other source. We have discussed this provision. Any interest earned on NRE account would be exempted under section 10(4), I guess. So that is going to be exempted. The only income he would have is 30,000, which is below basic exemption limit. So he does not require to file his income tax return for this purpose. You can go through with the solution. Very simple solution. You can see the only income under the default tax regime would be 33,000. So no need to file income tax return. Clear? If he will do the expenditure on 3 lakh on foreign travel, then he has to mandatory file his income tax return, because exceeding 2 lakh rupees, you have to file income tax return. In this part, we have suppose if that 2,88,000 has not been exempted, that what could be the situation? So you can go through with this provision. Very simple question. Now, a specified class or classes of person to be exempted from filing return of income. So there are some category of person, those has been removed or has been exempted from filing of income tax return. This is for your reading purpose. Government can notify those category of person, those are not required to file income tax return, etc. Now, return of loss we are discussing. Section 139(3), the return of loss. Regarding this topic, we have already discussed something in set off and loss chapter. You might have remembered under set off loss chapter, we have discussed that if you need to carry forward your losses, you have to file your income tax return up to due date of filing of return. Under section 139(1), section 80 was there, which has been discussed regarding this, that return of loss need to be filed, on section 139(3) up to due date on section 139(1). If you want to carry forward your losses, except income losses from house property and unabsorbed depreciation. Unabsorbed depreciation and house property losses can be carried forward even if you do not file your return of income under section 139 one time. So this section requires the assessee to file return of loss in the same manner as in the case of return of income. Section 80 requires, this section has been in set off chapter, that you have to mandatory file return of loss under section 139(3) on or before the due date, as we discussed, July, October or November, if you want to carry forward these losses. And you can see the losses from house property and the unabsorbed depreciation, that can even be carried forward even if you do not file your return of income up to due date. What are belated return? Revised return. So if you do file your income tax return up to due date, that would be a normal filing of return. So the due date, suppose, in case of Mr. A, suppose the due date is 31st of July. And the last date of filing of return is 31st December 2025. This is our last date of filing of return. So if you do not file return, either you are going to file your return on this date, that would be a normal return. If you do not file your return up to due date, but file return between this duration, from due date till last date. If you file any return after due date, but up to the last date of filing a return, that return would be called belated return under section 139(4). So this return would be a return which is filed on due date under section 139(1). And if any return which has been filed after due date but up to the last date, that would be called belated return under section 139(4). Fine, you cannot carry forward losses under belated return except the house property and the unabsorbed depreciation. If you filed a return under section 139(1), or if you filed a return under section 139(4), in both situations, after filing this return or even after filing this return, suppose you filed a return as due date, or suppose this belated return has been filed in October. After filing belated or normal return under section 139(1), if you file there is some mistake or some omission, etc. of the information, you can refile your return. So even if it is a belated return or if it is a normal return, if there is any mistake has been found out by the assessee himself, then he can revise these return, and that is called a revised return. But let me tell you, the belated or revised, whatever return these are, the last date of filing these returns are up to 31st of December. In October, you filed a belated return, and in November, you realized that there was some mistake. So you can revise it, and that would be called a revised return under section 139(5). In June, you filed your return. In November, you realize there is some mistake, etc. Then you can file a revised return under section 139(5). And you can revise your return multiple times also. It is not there that you can only revise once. You can revise your return multiple times also, up to the last date, which is 31st December 2025, or completion of assessment. Before completion of assessment by assessing officer, and whichever is earlier would be the last date. Now, what is this? This is a new thing to understand. Act says that due date is 31st July in your case. So you have to file, you should file your return up to this date. That's the best case scenario. But if you forgot to file or you are not able to file your return up to 31st of July, then we are going to make a last date provision also. And the last date has been prescribed like this. The date is 31st December 2025. But you have to compare, you have to be very conscious about it. The date of filing of return was 31st of July 2025. Before this date, Income Tax Department will not going to ask you to file income tax return, or the department is not going to assess your income. What is the return filing? Return filing means declaration of liability. I have told you, this is a process which is called declaration of liability. So for the declaration of your income and tax, department has made a prescribed date, that's called due date. And department cannot done the assessment. The first point was declaration of liability. The second was assessment of liability. So the assessment of liability cannot be done before the due date under section 139(1). So assessment would be done, can be done only after due date. So if you did not file your return up to 31st July 2025, so even you did not declare your liability, department can estimate your liability themselves also. Till due date, they will not do this. No assessment will be done till due date of your return filing. But once your due date has been expired, once your due date has been lapsed, then there is a fear that department can calculate your income on the basis of their information and calculate their tax also. That's called assessment. We have separate assessment section 143(3), 144, 147. That is going to be discussed at final level. But the assessment means department will check or calculate income on their basis. And the last date of filing is 31st December only if department does not done assessment till that date. Suppose you did not file your return till 31st of July and you think that I will file before 31st December. But between this duration, if department completed the assessment, suppose in November, you was thinking that you are going to submit your return in December. But after 31st of July, department say, okay, you did not file your income tax return. Now I will assess the income myself and I will calculate the tax myself on the basis of various information. They can have most of the information. Whenever you are giving your PAN number in anywhere, whether in a bank account, whether in a hotel, restaurant, purchasing of a car, or any expenditure, etc., that information would be automatically transferred to the income tax department. So it does not mean that department is collecting your information by your declaration of liability in the whole year with the help of TDS declaration, TCS declaration, your PAN number submission in different various situation, property sale, whatever it is. On the basis of that, department is analyzing everything, almost all transaction. So if you do not file a return of income and department decided to calculate the income themselves and completed the assessment, suppose the assessment has been completed. In that case, the last date has been mentioned before completion of assessment. That date would be given in question. Do not worry. The earlier date would be your date, last date for filing of return of income. Suppose the assessment completed in November, 15th November 2025. You did not file your return of income and department completed assessment on 15th November 2025. And you are thinking, okay, I will file till 31st of December. So 31st December is a fixed date in all cases. But the second date would be given in the question. If the assessment has been completed on 15th November, so this date would be 14th November. Remember, this date would be 14th November, one day before the completion. Before completion, because completion on 15th, so this date would be 14th of November. So earlier is 14th November 2025. Now this would be called your last date. If no assessment has been done, then last date would always 31st December. That's a fixed rule. If no assessment, last date would be 31st December. But if assessment has been done, then you have to find it out earlier date. So now this would be called last date in this example. So if the question says assessee file return before or up to 14th of November, that would be the return filing valid. But if any return has been filed after 14th November by assessee, suppose assessee filed return on 16th November 25, that would be called a invalid return. So the last date you need to file in question. If completion of assessment date not given, the last date would always be 31st of December 25. But if completion of assessment date given, then one day before that date, you need to take for comparison, and earlier would be your last date. Any return which has been filed up to 14th November would be a valid return. If return has been filed after 14th November, that would be an invalid return. That would be void ab initio. No existence. Okay. Now let's see your queries. Tanu is saying, sir, but audit is mandatory for professionals now if income exceeding 50 lakh. How do you know my income is not exceeding 50 lakh? And there is section 44A, DA also there. If your income does not, your receipt, in case of professional, your receipt does not exceeding 50 lakh, but you want to disclose your income less than 50%. Suppose my receipt is 16 lakh, suppose 16 lakh, 16. And I want to disclose my income is only 6 lakh rupees. So as per section 44 ADA, if I am declaring less than 50%, I have to go for audit. So what is this AIS and TIS? AIS is annual information system, and tax TI is also a taxpayer information system. AIS TIS is the information, whatever I was discussing, na? Like about what, whenever you are using your PAN number in your bank account, etc., according to that PAN number, etc., government fetches your information. That information is called AIS and TIS. How do we know about assessment done or not? On income tax portal, there would be a letter would be issued. So if you are going to file your return after 14th of November, the income tax portal would not accept that because order would be already uploaded on the site. So assessee knows that department will assess the income on 15th November in this example. No, assessee would not know. If you did not file your return of income, department could send you an intimation, or even without intimation, they can done the assessment. So that is a different part. How assessment would be done. In some cases, notice is mandatory. In some cases, notice is not mandatory, etc. That is not in our syllabus at intermediate level. That would be discussed at final level. So for the purpose of this section, you have to remember how to find out the last date. The completion of assessment date would be given in the question. So do not bother about that situation. Okay. So for both the belated and revised return, due date is same. Ishan, due date is not for belated and revised. You might be asking the last date for. So for belated and revised return, last date is same. Due date would be a wrong question, whatever you are asking. Nidhi is saying 139.4 and 139.4 दोनों रिवर्स है सर. रिवर्स नहीं, रिवाइज. belated return मीनिंग क्या है? निधि, जब रिटर्न फाइलिंग की ड्यू डेट है 139.1, ठीक है, ड्यू डेट के हिसाब से 139.1 में 31st ऑफ जुलाई, तो 31 जुलाई के बाद लास्ट डेट आती है 31st दिसंबर और असेसमेंट ऑफ असेसिंग ऑफिसर विच एवर इज अर्ली. तो अगर आपने ड्यू डेट से लेकर लास्ट डेट के बीच में रिटर्न फाइल करी है तो वो बोली जाएगी बिलेटेड रिटर्न. अगर ड्यू डेट पे फाइल कर दी और उसको चेंज कर रहे हो लास्ट डेट से पहले तो वो बोली जाएगी रिवाइज रिटर्न. बिलेटेड को रिवाइज कर रहे हो तो बोल जाएगी बिलेटेड रिवाइज रिटर्न. वो है ड्यू डेट रिवाइज रिटर्न, ये है बिलेटेड रिवाइज रिटर्न. तो दोनों ही रिवाइज हो सकती है, बट जो ड्यू डेट पे फाइल हुई है वो बनेगी ड्यू डेट रिवाइज रिटर्न. जो बिलेटेड फाइल हुई है उसका नाम हो जाएगा बिलेटेड रिवाइज रिटर्न. फॉर योर अंडरस्टैंडिंग. ओके, मूविंग बैक. In this chapter, there are multiple provisions for your reading purpose only. So we are focusing on those technical provisions. Those are really need to discuss. There are where PAN number need to submit, what is Aadhaar number, etc. These kind of provision also in this chapter, but we're going through with the technical part of this chapter. Okay. Now, any person who has not furnished a return within the time allowed to him under 139(1), that means who did not file return as per due date. Furnished return before 3 months prior to the end of the relevant assessment year. That is a fixed date, 31st December, or before completion of assessment. Whichever earlier, that would be called a belated return. Clear? The revised return now. If you filed a return under section 139(1) on due date or belated, you can revise both returns. But the due date return revised would be called due date revised return, and belated file return would be revised called belated revised. The last date for revise is also the same, 31st December, before completion of assessment, whichever is earlier. This is the diagram which is comprising, or we can say the summary of the provision, whatever we have discussed till now. Beautifully made by the institute. Mandatory filing concept, due date filing concept has been summarized. Loss return, belated return, revised return, the last date of filing of return, etc. has been just summarized in a single page. Illustration 2. Explain with brief reason whether the return of income can be revised under section 139(5). Kya belated return filed under section 139(4) can be revised? Yes, it can be revised. Return already revised once under section 139(5) can revise? Yes, it can revise. Return of loss filed under section 139(3), yes. All these return can be revised, not an issue. Now section 234A, interest provision. So I have discussed with you section 234B, interest, and 234C, interest provision. That is for default in advance tax, less than 90% or not paid on the due date. When we were discussing the provisions of section 234B and C, I have asked you that what component we need to calculate the interest. In any case, there are 4 things we need to calculate the interest. So the first thing was rate of interest we should know. The second thing, the duration. The third was amount on which interest need to be calculated. And the fourth was the applicability. So first of all, we have to understand when section 234A interest would be applicable. So it says, I told you, if you file your return on due date, if you filed your return till due date, no interest, no penalty. So if you do not file your return of income on due date, so that means if you filed a belated return after due date, then you have to pay interest under section 234A. So 234 is applicable if you failure to file a return of income on or before the due date under section 139(1). So interest is payable wherein assessee furnish the return of income after the due date, does not furnish the return of income. The rate of interest is 1% per month or part of the month. Same in case of section 234B. Month or part of the month. The duration is after due date. The interest time would start. So starting date would be after due date. So the due date is 31st of July, suppose. The interest would be start from 1st of August. So after due date start, and it would end up to filing of return of income or assessment done by the department, as the case may be. So till you did not file your return of income, it will run. Or if you did not file a return of income, then till the time department will complete its assessment, it would continue. Clear? The amount would be same as in case of section 234B. The amount would be total tax, total assessed tax, minus TDS, TCS, advance tax, etc. Same case. And the applicability we have already discussed. So you can see the provision 1% per month, part of the month, the time which starts from the due date of furnishing of return, and it would complete date of completion of assessment if no return is furnished. If return is furnished, up to the date of furnishing of the return. The amount would be calculated as in case of section 234B. So then we will move on self-assessment. So let me see the queries and then we will take a short break. Amount, rate, duration, applicable. Very good, Priyanshi. Next is Kesapuram Kumari is asking, sir, can we revise the revised return? Yes, we have discussed that. You can revise your revised return multiple times, as many times as you want, till your last date of filing of return. Nidhi is saying 234C ek bar. Look, we have to understand the 4 points. Rate of interest is same, Nidhi, as 34B. The time duration is from first day after the due date, like it's 31st July is the due date. From 1st August, it will start. Suppose you filed your return on 10th of October. So from 1st July, from after 31st July, from August, September, and October, 3 months delay was there. So 3% interest is going to be charged. The amount calculation is same as per section 234B. So suppose the amount is 20,000 rupees. 3% on 20,000 is 600 rupees would be your interest under section 234A. Sahil is, if we file return on 31st December 25, can we revise return after that? No. The last date of revising return is also 31st of December. After 31st of December, no belated return, no revised return can be filed. Only there is a new concept of updated return is there. That we will discuss later in this chapter. Harshada is saying if already assessment done before revised return, then can rectification done in next year? Rectification to section 154 is a different part. If assessment has been done once, then you cannot file your return of income. You cannot file your return of income once assessment has been done under any section. Okay. So, Ashok sir, can we go for a small break? Welcome back, everyone. So we were discussing the provisions of return filing and self-assessment tax. I believe you must have your T copy, etc. Moving forward, the return filing process we have discussed, revised return, etc. Now the concept is self-assessment tax. We will consider it just a just a minute. So self-assessment tax, we have discussed. I have told you that those were collection of tax, and whatever will remaining that needs to be paid as a self-assessment tax. Suppose this is your total assessed tax, and whatever amount you have recollection of tax, we have discussed this thing. And whatever will remain, if there any balances remain, we have to pay this with filing of our income tax return under section 140. So this is what we are going to discuss. Payment of tax, interest and fees before furnishing of return of income. So you have to deposit your tax before filing of return. Required to be furnished under inter alia section 139 after taking into account. So whatever you have paid as TDS, the amount of tax already paid under any of the provision of the Income Tax Act, you have to reduce it from your total tax liability. We have discussed that this AMT credit concept we will discuss in last chapter, computation of total income and tax, any tax provision. So technically the section 140A says that whatever is your total tax liability, and out of that total tax liability, whatever amount you have paid as AMT credit, whether relief, TDS, TCS, advance tax, or via any mode, the remaining is going to be assessment tax. Order of adjustment of amount paid by SSC, whatever amount you have paid would be your tax part. So if you have paid anything, the first it needs to be adjusted from your fees, the other interest section, of course, same. Total amount of tax reduced by advance tax, TDS, TCS, relief, AMT credit, whatever it is. And same is for section 234C also. Now a very interesting and important topic is updated return. So we have discussed return file on due date under section 39.3. 139.4 we have discussed belated return. And revised return we have discussed section 139.5. And with all these things together, we have come before completion of assessment by assessing officer, whichever is early. Till this point, we have discussed our points, but it's not the end. Suppose you have filed your income tax return either on due date or whether it's December 25 has been passed. Either you did not file your return of income or you did not file your return of income intentionally. And this date has been passed. Suppose assessment has not been done. 1st December. Now you realized that you should change something in return whatever you have filed. Or even if you did not file any return, now you want to file your return of income because you are now scared of that if department has find out my income, they will impose penalty, interest, etc. So even if after expiry of this last date of return, if you want to file your return, you can file it 2 years from the end of relevant March 26. So according to it, we can file our assessment year 25-26 updated return up to third updated return. It can be filed only once per assessment year. So it cannot be revised. If you file your update once, it would be full and you have to show your income. The tax would be there. You cannot file update when tax is decreasing or on. So if income tax department has been started your income tax proceeding, your assessment is started even started, not completed. So if return and does not pay the additional tax, then the return would be invalid. Under updated return, the tax need to be increased. There should be some increase. Then that would be an invalid updated return. Additional tax liability would be 25% or 50% depending on different situation. So for your assessment year 25-26, if you file your updated return up to 31st March 27, last date was 31st December 20, 25%. But if you file your updated return on or after 1st April 27 till 31st March 28, the 50% of additional tax need to be deposited. Again, additional tax would be there. Interest under section 234 ABC could also be there according to your assessed tax. Okay. Option to furnish updated return. Any person may furnish an updated return of his income or the income of any other person in respect of which he is assessable. So the good thing is, if you have already filed your return of income, if you already file your return of income at all, still you can file an updated return under section 139(8)(a). Remember, updated return would be filed only after expiry of 31st December 25. You cannot file updated return before this date, because before this date, you can file a belated return. So updated return would be only able to file after expiring of the last date. Okay. This is irrespective of whether or not he has furnished the return under section 139(1) or 4 or revised. For example, an updated return for assessment year 24-25 we are talking, not 25-26. The example is for assessment year 24-25 can be filed up to 31st March 27. For our assessment year, we can file up to 31st March 28. Non-applicability. In which situation you cannot file your updated return? If it is a return of loss, because if you are increasing your loss, that means tax is going down. So under updated return, the income or tax would always increase. It cannot go down. Or if it is a refund can go down. So technically refund is going down means income or tax is increasing. So if it is a loss return, you cannot file a updated return. That means updated return is for the benefit of department. There is no tax benefit point of view in case of updated return. If your refund is going to be increased by filing an updated return, that is not allowed. You can see you cannot file a loss return. Why? Because tax is going to be increased, so not allowed. Has the effect of decreasing the total tax liability in any case. If your tax liability is decreasing, not allowed. If your refund is increasing, again, tax is decreasing. So when there is a department or revenue benefit is there, in only that situation, update return can be filed. There is query from Priyanshi. If assessment done after 31st December 25, if assessment has been done, then you cannot file update return for that year. Okay. Loss. So that means you are going to set off that loss in future year and going to reduce your tax liability. But suppose if there is a loss of 2 lakh, so now the net income would be plus 1 lakh. So that is going to increase the tax in future year also. So that is allowed. If any person has a loss in any previous year and has furnished a return of loss on or before the due date, he shall be allowed to furnish an updated return. You can go through the example. If updated to be furnished for subsequent previous year in case third above, yes, previous year 22-23, that means assessment year 23-24, you have submitted your normal return, 2 lakh rupees loss. Now if you revised it as an updated return and showing your income is 3 lakh rupees, and before that in 24-25 you have carried forward this loss of 2 lakh rupees and set off from the income. Suppose 5 lakh was there. Then if you update your return of this year, then listen very carefully. You have changed now, loss is 0 and your income is 1 lakh. Now you have to update your 24-25 return also. Because now 24-25 return loss would be 0 because already set off in 23-24. And income need to be showed at 5 lakh rupees. So if you update your return, so it is connected with future year also. If you update your income tax return of any year when there was a loss, and due to update return, now there is a change of loss. Loss has been written in subsequent year returns also. So if you update a return of loss for assessment year 23-24, if there is a loss of suppose 2 lakh rupees, which has been already carried forward in 24-25, and now you want to update your return in 25-26 of 23-24 year, then because if you will change in 23-24 year loss, then you have to change your loss in the next year if you have carried forward that loss in 24-25 assessment year return. So point number 4 talks about it. Circumstances in which update return cannot already, if you already furnished the update return, you cannot revise it. If your case is pending or has been completed. So if your assessment case is pending with department, you cannot file update return. Or if update case has been completed, order has been passed for assessment, then again you cannot file your updated return. Tax on update return you have to calculate, assuming it is a normal return. As you calculate tax and interest when you file a normal return, you have to calculate your update return tax also. If no return has been furnished earlier, then it would be a fresh calculation of tax, interest, etc. And that tax and interest you have to be paid along with the additional tax computed. Whatever would be your tax, extra 25% or 50% need to be paid if you are filing your income tax return first time as a updated return after expiry of last date. So if it is no return has been filed earlier, then a fresh tax liability need to be calculated as per normal case with interest under section 234A, B, C, whatever it is. Manner of computation exactly same of tax payable. Whatever would be your total tax liability, the amount already paid as advance, interest would be calculated normally in section 234A, etc. If return already filed earlier, if you have already filed your return of income earlier as a return filed on due date or as filed on belated return, in that case, when you will file an updated return in which your tax on the basis of your updated return, and then again, whatever tax as an advance tax you have paid earlier, TCS, TDS, credit, AMT credit, relief, and if any tax under section 140A as self-assessment tax, if already paid when you filed your normal return, if any tax has been paid at that time, that is also going to be reduced. The balance you need to be paid with additional tax. And the interest under section 234A, etc. needs to be calculated accordingly. The manner of calculation of tax exactly same as we have discussed. The extra whatever amount you have already paid under section 140A when you have filed your normal return, this need to be extra deducted. Interest on section 234B, C would be calculated as in normal case. Example also given. You can go through it. Additional income tax we have discussed. If you have filed your updated return within 12 months from the end of the relevant assessment year. So I have explained it up to 31st March 27. From 1st January 2026 till 31st March 27 of return, the additional tax would be 25%. And from 1st April 27 till 31st March 28, it would be 50%. Now, defective return. We will discuss the provision of defective return. Miss Harshada is saying, but sir, this carry forward loss of previous year will reduce tax liability. No, it will increase your tax liability. Suppose in 23-24, suppose in assessment year 23-24, you filed your income tax return where you claimed loss of 2 lakh rupees. And income was 10 lakh rupees. This loss was carry forward. And this is other income. So technically, you have paid tax on 10 lakh rupees. Now this loss has been carried forward in 24-25. Suppose this was 2 lakh and other income was 12 lakh rupees. Same head income. So this has been set off and tax has been paid on 10. You are going to file. Now in 25-26, this duration, you decided to update your assessment year 23-24 return, and now there is no loss. You decided the loss was wrong. There should be 0 according to you, and the tax would be on 10 lakh. You have paid it. And some other income also you have shown 1 lakh rupees, 11 lakh. The tax you already paid on 10 lakh is going to be reduced. What is going to be the effect of this loss? Going to be 0. Now, because you have claimed this loss of 2 lakh rupees in 24-25. So now you also sum of 24-25, assuming the income of 13 lakh only, and tax need to be paid accordingly. So the point was what we were discussing, that the loss need to be update the return of subsequent year would work like this. I hope it's clear now, Harshada. Okay. Update return is filed at any time till 24 months. Yes, if moving on to defective return. It's a very simple concept. If you filed your return on due date or belated misinformation or mistake, you have to rectify it within 15 days, or the time could be increased by the department. So if you rectify that defect, of rectification of defect, suppose you filed a return on 30th of June 2025, income tax issue a notice and says your return is defective on the basis of some information, some document, some information is represent like the tax paid information is not correct. When you and you wrongly submit some misinformation in that, challan number is wrong, etc. So department says your return is defective. Kindly correct the defect within 15 days. File the return within 15 days. So even if you have filed the return within 15 days, suppose on 20th August 2025 you have written, or it would be assumed as the return would be filed on due date. That means it would have been treated as filed on 30th June 25. The answer is 13 June 25. So even if the defect has been rectified after due date, but within the time allowed by the department. So if that defect has been rectified, then the return would be assumed as filed on the original date. So even if we are rectifying the defect on 20th of August, but this return would be assumed as filed on 30th of June 2025. What if assessee did not rectify the defect? If you do not rectify the defect, 15 days has invalid return means it would be assumed that no return has been filed. Void ab initio. Okay. Very simple provision. Assessing officer considered that the return of income furnished by the assessee is defective. He may intimate the defect to the assessee and give an opportunity to rectify the defect within 15 days from the date. This time can extend it for 15 days more. So if you have filed the return as on the original date. Now section 234F That is a fees. The penalty we called it fees. The applicability section 234A plus a fees payment you need to make under section 234M. That could be 1,000 till 5,000. So where a person who is required to furnish a return of income under section 139 fails to do so within the prescribed limit under section 139(1), he shall pay by a fee a sum of 5,000 rupees. This 5,000 would be up to rupees 1,000 if your total income does not exceed 5 lakhs. So if you did not file your return under section 139(1) and your total income is up to 5 lakh, the fees would be 1,000. If it is exceeding 5 lakh, the fees would be 5,000. Now, income tax transparency reform. Transparency reform means whatever transaction you are undertaking, you have to give your PAN number and Aadhaar number. So you are selling, even if you are going to foreign country, you have to submit your PAN number. If you're opening a bank account, if you are depositing in your account more than 50,000, if you're dealing in shares and security. So government wants all this information. So they can identify those persons, those are doing this excess notice on the basis of these transactions. If they are paying tax, but on the basis of transaction, if department feels that the tax is lower, what it should be, made a series of transactions for which you have to submit your PAN detail. And on the basis of these transactions, department will analyze number and Aadhaar number. So these are the max, these provisions are those provisions which is most of for reading purpose. No technical points are there. So I'm trying to cover as much as we cover. Just who need to file income tax return. But we did not discuss who needs to have a PAN. So now the provisions are here. Subsection 1 requiring your basic exemption limit. You have to apply for the PAN number before 31st May of the assessment year. So that means we are talking about this date. So if your income exceeding 3 lakh, 2.5 or the person who is assessable under you, his income exceeding, then you have to apply for PAN number up to this specific date. Every person carrying on any business or profession, if your gross receipt exceeding 5 lakh, then you have to apply for PAN number up to this date. Only exceeding 5 lakh still. If every person who is a resident other than an individual which enters into a financial transaction of an amount aggregating to 250 or more in a financial year needs to apply for PAN number before this date. A person who is the managing director, partner, trustee, executive officer, office bearer of any person referred to in point number 3 needs to apply up to 31st May 2025. Further, even if you do not fall in the above category, but if CBDT thinks that assessing officer need to allot you PAN number according to your transaction, they can allot you PAN number. So these were the compulsory cases of applying for PAN. But except these cases also, CBDT has given power to the assessing officer that if he wants or if he thinks that you should have a PAN number, then according to rule number 11(4)(BA), you need to apply for the PAN number. Person required to apply for PAN, you can read it out. Every person who deposit into a bank account 20 lakh or more, he needs to apply for PAN number within this time. Every person who withdraw cash more than 20 lakh also need to apply for PAN when this limit of 20 lakh exceeded. If you needs to open a current account or a cash credit account with a banking company post office, you have to apply for PAN within 7 days. Those are not required to apply for PAN. These are the category of person. Those are not required to apply for PAN. These all are for reading purpose. General provision. If there would have been any problem, you can ask me in the next class. We will discuss it. Okay. The most important point in this topic of transparency provision is these transactions. These transactions are utmost important. Very, very important. I've seen multiple questions has been asked from these transactions. So these are the transactions. If you are going to undertake these transactions, any of these transactions, you have to submit your PAN number. So these are the transactions for which PAN number have to be submitted. If you are going for a sale or purchase of a motor vehicle, you have to give your PAN number. respective of your values. If you are opening an account other than a time deposit, that means FDR, or a serial number 12, except if you're going to opening an account, then you have to submit your PAN number. Making an application to a banking company or cooperative bank for the opening of account, you have to give your PAN number. Demat account you want to open, PAN number. Payment to a hotel or restaurants, if the payment is in cash exceeding 50,000, you have to give PAN number. So whenever you are undertaking these transactions, you are giving your PAN number, and this information is going to be collected by the income tax department. On the basis of it, they will find out that you should file your return of income. If you are not filing, because these are high value transactions, they can ask you to file return of income. Or if you are filing your return of income but less amount, so on the basis of these transactions, they can analyze that you should file your accurate income. If you are going to travel to any foreign country and cash expenditure exceeding 50,000, mutual fund investment more than 50,000, payment to a company purchasing for debenture exceeding 50,000. In 80% cases, the value limit is 50,000 exceeding. So you can learn this in this way. In the examination, how the question will come, they will give you 5 or 7 transactions, and they will ask you, in out of these 7 transactions, in which transaction PAN number needs to be given. So you have to remember the amount limit and those transactions also. So for the purpose of amount limit, let me tell you, 80% cases, the amount limit is 50,000. Payment to Reserve Bank of India for purchasing bond, 50,000. Deposit with a banking company. Cash deposit if you do in a bank more than 50,000 in any day, you have to give your PAN number. If you have practically experienced it, if you're going to a bank account for depositing of cash in your parents' account, etc., the bank person will ask for your PAN number. Purchase of bank draft, if in cash, more than 50,000. A time deposit, FDR, more than 50,000 each, or aggregate more than 5 lakh in a financial year, you have to give your PAN number. Prepaid payment, policy guideline, etc. If it is more than 50,000, you have to give your PAN number. If your life insurance premium you are paying in a year more than 50,000, sale purchase of security exceeding 1 lakh, sale purchase of shares of a company not listed, 1 lakh, sale purchase of immovable property exceeding 10 lakh rupees, sale purchase of any goods or service if exceeding 2 lakh rupees per transaction. So in these 18 transactions, you have to submit your PAN number. If you do not have your PAN, then a declaration in form number 60 have to be given that you do not have your PAN. So kindly read these provisions. The requirement of giving your PAN number is not applicable if this is state government, central government, etc. Or if you are a non-resident in these specific point, then you need not to give your PAN number. Meaning of certain phrase, you can read it. Intimation of your PAN number to the person deducting or collecting tax at source. So you must have remembered that TDS also, if you do not give your PAN number, then the tax would be deducted at higher rate. So you have to give your PAN number to the person who is deducting your tax or collecting, TDS or TCS case. Quoting of PAN in certain documents. So these are procedural part, you can go through it. Requirement to intimate your PAN and quote PAN not to apply to certain persons. So there are some category of person, those do not need to quote or apply to certain, those not need to give their PAN number. If estimated total income for the previous year would be nil. Interchangeability of PAN with Aadhaar number. Kindly read this provision. Let me see if there is any query. Kesapuram sir, what will be the tax rate for this update return? Which assessment tier rate would be applicable? The same assessment tier for which the income relates. If you are filing your update return right now, like 8th July 2025, for assessment year 23-24, then the rate of assessment year 23-24 would be applicable. Okay. So if you do not have PAN number, you can utilize your Aadhaar number also. So that is allowed as interchangeability is allowed. Quoting in authentication of PAN or Aadhaar number. So these all are for reading purpose. Every person entering into such prescribed transaction is required to quote his PAN or Aadhaar number as the case may be in the documents pertaining to such transaction, and also authenticate such PAN or Aadhaar number in the prescribed form. So these are the transaction in which you have to quote your PAN and Aadhaar, cash deposit, cash withdrawal, opening a current account, etc. Power to make rules. CBDT can make rules for following things: the form and manner in which application for PAN may be made and the particulars to be given. The categories of transaction, whatever we have gone through, CBDT can add other categories or can reduce those transactions. The category of documents required for allotment, which PAN or Aadhaar number as the case may be, shall be quoted by every person. The class or classes of person on which this section does not applicable. The form and manner in which person has not been allotted a PAN shall make a declaration, etc. Meaning of certain term, what is the meaning of Aadhaar number, what is the meaning of authentication, you can go through it. There is a technical point what I'm going to discuss with you. You need to discuss these, you need to read these penalties also. These are the penalty for failure to comply. Failure to comply with the provision of section 139A. That means if you need to take a PAN number as per the mandatory provision to take the PAN number, what we have discussed, if your turnover exceeding 5 lakh, if you need to file your income tax return and you do not apply for the PAN number, 10,000 penalty. If PAN Aadhaar number you do not quote in the documents in which it needs to be quoted, 10,000 rupees penalty, etc. Linking Aadhaar with PAN was mandatory. It has been mandatory by now. So you have to link your Aadhaar number and PAN number. If you do not do so, the PAN number would be deactivated and you have to pay a certain amount of 1,000 rupees to link it again. So every person who is eligible to obtain Aadhaar number is required to mandatorily quote Aadhaar number in the application form for allotment of PAN in the return of income. In the return of income also you have to quote your Aadhaar number also now. This is a circular regarding it. Kindly read it. Mandatory quoting of enrollment ID where person does not have Aadhaar number. So earlier it was the case that you could enter your enrollment ID for application of Aadhaar number. Earlier it was allowed. That was a 28-digit number enrollment identification number. You could utilize it in place of Aadhaar number. But with effect from 1st October 2024, the option of quoting enrollment ID of Aadhaar application for allotment of PAN number or in the return of income furnished is discontinued. Now you cannot enter your enrollment ID. Intimation of Aadhaar number to prescribed authority. Consequence of failure to intimate Aadhaar number. You can go through with these provision. Provision not to apply of certain person. All are procedural aspect. Now the point what I would like to discuss with you is tax return prepare scheme. So income tax department has appointed a kind of person who will file your return of income tax. So technically income tax department has started a scheme for some specific class of person. They will undertake a course which is run by the income tax department and they will understand how to file income tax return. And an assessee can file his income tax return with the help of a TRP also. So who are eligible for this course? Who can file the tax returns as a TRP? These provisions are going to be discussed in this topic. So special eligibility criteria is there. A scheme for submission of returns through tax return preparers under section 139B. This section provides that for the purpose of enabling any specified class or classes of person to prepare and furnish their return of income, The CBDT may notify a scheme to provide that such person may furnish their returns of income through a TRP, authorized to act as such under the scheme. The tax return preparer shall assist the person furnishing the return in a manner that will be specified in the scheme and shall also affix his signature on such return. A tax return preparers, who can be a tax return preparer, it says means any individual can be a TRP other than. So technically means these 4 persons cannot be TRP. Any officer of a scheduled bank with which the assessee maintains a current account or has other regular dealing. Suppose Mr. Ram is the assessee. He has a current account in SBI Bank. So the officer who is working in SBI Bank cannot be a TRP for Mr. Ram. But suppose there is Mr. Shyam who maintains a bank account in Bank of Baroda. So this SBI officer can work as a TRP for Mr. Shyam because Mr. Shyam does not maintain an account in his bank. But he cannot work as a TRP for Mr. Ram. I hope it's clear. A legal practitioner who is entitled to practice in any civil court in India. They can also not be a TRP, an accountant, including a CA. They cannot work as a TRP. An employee of the specified class or classes of person. So, an employee of the specified class or classes of person cannot work as a TRP. Who has been authorized to act as a TRP under the scheme? So, except these 4 category of person, anyone can be a TRP. What are the meaning of a specified class or class of person has been defined over here. The specified class or classes of person means, for this purpose means any person other than a company or a person whose accounts are required to be audited under section 44AB or under any other existing law who is required to furnish a return of income under the Act. So the provision says, if you are an employee of a company or you are an employee of an organization for which audit has been done, then in that situation, you can be a TRP. Clear? The scheme notified under the said section may provide for the following. The scheme has explained the manner in which the period for which TRP shall be authorized, education and other qualification for which this course would be started, the code of conduct, duties, obligations, circumstances, other relevant matters. The CBT has been prescribed. The scheme is applicable to all eligible person. Eligible person is individual or a HUF. An individual who has been issued a TRP certificate and a unique identification number under this scheme by the partner organization to carry on the profession of TRP. However, the following person are not entitled to act as TRP. We have discussed that: officer of a bank, legal practitioner or accountant. Educational qualification, you can read it. Preparation of and furnishing the return of income by the TRP. An eligible person may, at his option, furnish his return of income under section 139 for assessment year through a TRP. However, the following eligible person cannot furnish a return of income through TRP. So TRP can file return of income of any person, but they cannot file return these kind of category of person. That means if you are conducting audit under section 44AB or any other act. So if your business is under audit, then TRP cannot file the return of a business which is under audit, who is not a resident in India during the previous year. So for a non-resident, TRP cannot file a return of income. An eligible person cannot furnish a revised return of income for any assessment year through a TRP unless he has furnished the original return of income via TRP. So if Mr. A has filed his original return from a CA, and if he wants to revise this return, then he cannot revise his return with the help of a TRP. So if you want to revise your return with the help of TRP, that in case the original return should also be filed by the same TRP or any other TRP. If original return has been filed by other than TRP, then a TRP cannot revise that kind of return. Illustration you can see, the business is covered for audit, so TRP cannot file this return. This is the note for the person for the purpose of a specified category of employee. It may be noted that as per section 139B, an employee of the specified class or classes of person is not authorized to act as TRP. Therefore, it follows that employee of a company and person whose accounts are required to be audited under section 44AB or any other law for the time being in force are eligible to work as a TRP. So employee of a company or any organization which audit undertakes, the employee of that company and organization can work as a TRP. Other employee of any organization cannot work as a TRP. So that is a clarification regarding this point number 4. So if you are confused with this point number 4, you can read that clarification. So according to it, we can say a company and audit firm employees can work as TRP. If you are an organization of any other organization which is not a company or any firm for which audit has not been undertaken, then you cannot work as a TRP. Person authorized to verify return. Who can authorize the return? Who can sign the return? Individual case, individual will himself sign the return. If he is absent, the person duly authorized by him on this behalf with a valid power of attorney can sign the return, etc. When the individual is mentally incapacitated from attending to this affair, his guardian or any other person competent to act on his behalf. Where for any other reason it is not possible for the individual to verify the return, any person duly authorized by him on behalf holding a valid power of attorney. In case of Hindu undivided family, Karta will sign it. If Karta is absent, any other adult member of the HUF, Karta is mentally incapable, then any other adult member of the HUF can sign the return. In case of company, the managing director of the company, the managing director is not there or there is no MD, then any director of the company can sign the return. Where the company is non-resident, then these person can sign the return, etc. If company is wound up, the liquidator would be there. If any person has been appointed as the receiver of any asset, the liquidator is authorized to do the things. So you can go through with this. Okay, so those were the provisions regarding chapter number 8, return filing and self-assessment tax. And there's a lot of for reading purpose. And these reading purpose points are generally theoretical point regarding Aadhaar provision and PAN number quoting provision. You can go through it once. It is not that kind of question, I believe. Those will bother you. It's a simple theoretical procedural part. You can go through it. If there would be any problem, you can ask me. एक बैंक का दूसरे बैंक वाले अकाउंट ही टीआरपी होगा. यस, इन न्यूज एंड दिस टीआरपी बोथ आर सेम और नॉट सर. इन न्यूज, what is in news and this TRP both are same? Nidhi, this point I don't understand. Kindly explain your problem. Nidhi wants to ask something. Just a second. So can we unmute Nidhi? Nidhi wants to ask something. Nidhi, you want to ask something? You raised your hand. Okay. Sir, if Mr. A's TRP, Ishan is asking, and Mr. B got his return filed through Mr. A, can he furnish his revised return through Mr. C? Yes. Another TRP, you can opt for revising your return. But if the original return has been filed, not filed by a TRP, then a TRP cannot revise.
Good evening, sir.
Good evening, Nidhi.
Sir, my question is, जो न्यूज में लोग बोलते हैं,
वॉइस इज वेरी स्लो
सर
प्लीज.
न्यूज में जो टीआरपी होती है वो
हम्म.
टीआरपी और ये टीआरपी सेम है कि नहीं, बस
अरे
यही कंफर्म.
न्यूज की टीआरपी कहाँ से आ गई? ये है टैक्स रिटर्न प्रिपेयर. न्यूज या जो चैनल्स होते हैं, जो सीरियल्स आते हैं, उनकी टीआरपी अलग होती है. वो तो इस हिसाब से होती है कि कौन सा चैनल पे कौन सा सीरियल अनुपमा है, या किस्सा कहानी का, या तारक मेहता का उल्टा चश्मा, वो कितने व्यूअर्स देख रहे हैं, वो टीआरपी से कोई रिलेशन नहीं है. दिस आर डिफरेंट. या इंसान है, वो रेटिंग है. ओके, दिस कंप्लीटली डिफरेंट.
सर ये टीआरपी जो है वो कौन प्रिपेयर करता है?
टीआरपी कौन प्रिपेयर नहीं करता? टीआरपी एक तरह का कोर्स है. जैसे ग्रेजुएशन एक कोर्स है, जैसे सीए करना एक कोर्स है, वैसे ही इनकम टैक्स डिपार्टमेंट ने एक कोर्स निकाला है टीआरपी का. तो जो करना चाहते हैं, आप पढ़ेंगे ना एजुकेशन क्वालिफिकेशन, तो अगर आपने 12th कर रखा है या ग्रेजुएशन कर रखा है, उसके बाद आप इस कोर्स को गवर्नमेंट के थ्रू कर सकते हैं फीस जमा कर कर. अगर आप उसमें एग्जाम में पास हो जाते हैं तो आप लोगों की इनकम टैक्स रिटर्न फाइल कर सकते हैं. तो आप गवर्नमेंट के एक तरह से, आप समझो, एजेंट तो नहीं कह सकते. उसमें गवर्नमेंट कोई सैलरी नहीं देती. पहली बात ध्यान रखना, टीआरपी को कोई सैलरी नहीं मिलती गवर्नमेंट से. जो भी आप रिटर्न फाइल करोगे, उसमें जो टैक्स जमा कराओगे, इफ टैक्स जमा हुआ, उसका एक सर्टेन परसेंटेज उस टीआरपी को एज एन कमीशन दिया जाता. तो अगर टैक्स जमा नहीं हुआ उस रिटर्न में, तो आपको कोई इनकम नहीं मिलेगी. तो टीआरपी एक कोर्स है जो इनकम टैक्स ने स्टार्ट किया है. तो आप उसे करने के बाद लोगों के ऑथोराइज एजेंट बन जाते हैं गवर्नमेंट के बिहाफ पर. बट देयर इज नो सैलरी, नो अदर पेमेंट फ्रॉम द गवर्नमेंट. अंडरस्टैंड?
डन सर. थैंक यू सर.
Okay. Keshapuram Kumari is asking, sir, sorry to ask, but can you say again about the specified class of person in TRP? A specified class of person in TRP says if you are an employee of any company or any organization for which audit has been conducted, if you are employee of this kind of organization, company or a tax audit organization, then you cannot TRP. Then you can be a TRP. But if you are an employee of an organization for which no audit has been conducted, then you cannot be a TRP. Okay, Somesh asking, sir, if we file ITR on due date, then we update return file, then we have to pay additional tax in section 140B3. Yes. If there is increase in income, you have to pay the additional tax if you are filing it after 31st of December 2025. Next, Soumya Lodha. Soumya is asking, sir, एक बार टैक्स फिल करने के बाद हर बार ITL फिल करना होगा? अब this is a good question. लाइक आप हिंदी में पूछ रहे तो मैं बता देता हूं आपको. जैसे एक मिसकंसेप्शन होता है कि अगर आपके पास पैन नंबर है तो आपको रिटर्न फाइल करना है. ऐसा नहीं है. ऐसे ही इनकम टैक्स का हर ईयर सेपरेट ईयर होता है. तो जो हमने फर्स्ट में सेक्शन 139 के स्टार्टिंग में जो हमने पढ़ा, कंपलसरी फाइलिंग ऑफ रिटर्न ऑफ इनकम, 5 केस पढ़े. तो जिस ईयर आप उन 5 केस में से किसी एक में फॉल करेंगे, सिर्फ उसी ईयर आपको रिटर्न फाइल करना है. अगर इस बार फाइल करा तो नेक्स्ट ईयर भी सिर्फ तभी फाइल करना है जब आप उन 5 कैटेगरी में से किसी कैटेगरी में फॉल करें. अगर आप नहीं फॉल करते हैं तो आपको रिटर्न फाइल नहीं करना. ओके. नेक्स्ट इज अनुभव is saying television rating point. Yes, निधि क्या पूछ लिया सच में. Shagupta, sir, additional income tax 25% or 50% increased tax liability. Whatever would be your increased tax liability in filing of that updated return, on that increased tax liability, the 25% and 50% would be additional tax. Any other query, student? I will upload the MCQ of this chapter also. And this is very simple chapter, theoretical chapter. So, and the test to knowledge question also, there are 4 test to knowledge question. You can go through with those test to knowledge question. Theoretical based they are. If there would be any problem, we will discuss it. Let me again tell you one thing. Tomorrow would be our revision class for basic concept chapter 1 and 2. So if any of you going to join it, please, it's a request, go through the provision, because we are going to discuss only the numerical questions of almost 20 to 25 numericals. So it would be really helpful for all of you if you'll go through provisions of residential status and calculation of tax as per basic concept chapter. And this also one more request, in the day after tomorrow, we have the topic of total computation of total income and tax liability. For that topic also, I have asked you to please go through with chapter number 1, 2, and the capital gain tax structure provision. So that would really help when we will solve tomorrow and day after tomorrow class. Okay. There are some queries. Shagufta sir, you can please define repeal section 89 shortly. That is rebate. It cannot be defined in short, of course, because rebate is a very conceptual calculation based tax. What exactly it says, it just say one thing, that if you have arrear of salary, advance salary, or if any kind of income which has not been due earlier, not received due to some retrospective decision, then we have to check if we would have received that salary or that income in that previous year to which it relates. The tax liability would be lower because we are actually going to tax it in current year. But if it would have been taxed in the earlier year to which it relates, if tax liability would be less, then we can claim the rebate of it. I can do one thing only. I have the solved question and assignment of rebate in a very simple language. So if you would like, I would upload that numericals in the rebate provision topic in notes. So that could help you, because it needs actually at least 30-minute lecture to explain the rebate provision. So that topic must have been discussed earlier. Somesh is asking, so for in defective return, we have to pay any fees? No, Somesh, there is no fees for rectifier defect. No requirement of any fees. Okay. Shagufta Parveen wants to ask something. Yes, Shagufta, can we unmute Shagufta, sir? Ishan Bisht, as a chartered accountant, we cannot be a TRP. We cannot do that course because we are on the exception. The accountant word includes chartered accountant. Okay. Shagufta.
Hello, sir.
Yes.
Hello, sir. Hello.
Yes. Hello, Shagufta.
Yes, sir. So I want to say something.
Please.
If I maintain an SBI bank account, then he can't TRP in my.
Yes, correct.
He can't.
The employee of SBI account cannot be a TRP of your ITR. Correct.
यही पूछना था sir. Thank you.
There's a reason behind it. Let me tell you the reason. Because income tax and declaration of liability is a confidential thing. Income tax return, your income details are confidential. Now, suppose your account in the bank, and if there's an employee, so he would automatically know about your information, financial transaction, etc. So if he will file your return, so there could be a manipulation. So that's why, because that should be confidential information, the TRP cannot be the person who is the employee of the bank in which you are maintaining your current account or saving account. Okay?
Okay, sir. Understood. Thank you, sir.
Welcome. Harshada is asking, sir, will there be any problem solving session like previous year questions? Case scenario based? Yes, Harshada. Tomorrow it would be the case scenario based, new case scenario, RTP and MTP questions we are going to discuss for chapter number 1 and 2. Okay. Any more queries, friends? I guess, Ashok sir, I guess there is no more queries.
Yes, sir.
Close the session.
Yes, sir. I just want to just enlighten the student regarding the revisionary lecture, which you have already told them. For income tax specifically, we are starting revisionary classes from tomorrow onwards, students, and the schedule of the same is already hosted on your website. If you see the ICAI website, there is a BOS knowledge portal, or you can see the schedule on your BOS mobile app also. where you can find the whole schedule for this revisionary lectures. Because actually, students, it's very important before attending this revisionary lectures, you should revise your concept, because these revisionary lectures are for your practice purpose. So, on that, concept will be explained through the help of questions, case scenarios, apart from the questions which are there in the study material. So, it is very important that concept must be first clear. Then only you will be able to understand and solve the questions, the extra question which the faculty will take. And students also, the schedule for mock test papers is also uploaded on the website. Your first series of mock tests is starting from 21st of July. After that, there is a success at CA exam. In the session, we will guide you about how to prepare for the examination, and we will take the mock test paper question also. That is starting from 28th July. Then there's a second series of mock test which will be starting from 4th of August. And then again, success at CA exam that will be starting from 12th of August. So before that, your all this LVC divisional classes, LVC classes will be completed for this paper. I am talking about this paper, and revisionary lectures will also continue. That will it will go after your first series of MTP also. So please attend that mock test papers. If you are try to attend it on the branches, near branches of yours. If it is not possible for you to attend at the branch after uploading on the website, please. Okay, Priyanshi, I will take your query. So if it is not possible for you to visit the branch and give the mock test paper, then you can download the mock test from the website. Take a time of 3 hours, solve all the mock test paper questions without seeing the answer. And after that, compare your answers with the answers of mock test paper, which will be uploaded on the website, and see what are the points in which you have made the mistake. What mistake you have done in the mock test papers, and try to again revise that concept. What mistake you have done. It's a provisionally mistake, or it's just calculation mistake, or conceptually mistake. So that you can ask that in your next session, success at CA exam or the revisionary lectures. I have a query regarding this. What is the query? This is Priyanshi. I am confused which class to attend live and which to see recorded till 20th July, and timing will clash. Priyanshi, for that you have to definitely, because if I say about income tax, for Tuesday and Thursday you have live virtual classes. It's a full-fledged batch, and Monday and Wednesday we have kept the revisionary lectures. But definitely for other classes it might get clashed. So you have to see for which subject you want to attend the revisionary live, because if you have doubts, something you have to ask in the revisionary lectures, give prior to that class and attend that live. And for the other, you can see the recorded also. We have uploaded the schedule, so you can see which chapter, for which chapter, definitely you have to attend the live classes. Okay, or for live classes, I guess it's also about to end the live virtual classes. Revisionary classes started from today for intermediate, and live virtual classes for all the other subject also. I guess it's about to end in the. Yes, revisionary lectures you will that recorded will be available. You can view the recorded lectures for revisionary also, and from the YouTube also. But again, I will say, if possible, see the live classes, because if you have any doubt, you can ask the doubt on the spot from the faculty. So that will help you, because after classes, it's not like that we are not available. You can ask any query from the BOS faculty in your mobile app. There is an option of ask your query. You can ask your query over there also. But when the questions are taken up in the classes, so it's better that you join the live and ask and clear your doubt on the spot from the faculty for better understanding. There is no revisionary classes for audit. Priyanshi, revisionary classes for all the subject will be there. So see the schedule on your BOS mobile app or BOS knowledge portal. Schedule has been uploaded. Classes will be there for all the subjects. Any other queries, students? I know for these chapters you might have lots of homework, because for PAN, or I'll say like this, verify, who will verify the return of income or PAN, that mandatory quoting of PAN, there's so many limits. Somewhere it's 50,000, somewhere it's 1 lakh. So definitely that you have to remember, student, because there is no hard and fast. It's the department has prescribed the limit and the condition who has to, you know, quote the PAN in which cases, and the threshold also. So all these things you have to remember, the students. Priyanshi has raised her hand. 1 second, Priyanshi. Yes, Priyanshi.
Ma'am, there are actually no classes for audit for revisionary classes. Why so?
No, definitely it will be there. It may be after schedule has not been uploaded, but that will not the case कि for audit or for any particular subject there is no revisionary classes. Revisionary classes will be definitely there. Schedule may be due to because faculty or the schedule has not been updated on the website. I will check it, but revisionary classes will be definitely there. So don't worry about it.
Yes, ma'am. I have seen the schedule and I have noted it down in a paper. So I noticed that paper 5 is not there for all the weeks, 4 weeks.
Definitely, I will communicate your concern to the audit faculty, so then schedule can be uploaded on the website for audit also. But revisionary classes will be there for audit also.
Okay, ma'am. Thank you.
So, okay, students. So, I guess we can conclude the session.
Yes, ma'am. There is no query at my part also.
Yes, sir. Not in my part also.
Ashok sir, we can conclude the session. Good night, ma'am.
Good night, sir. Good night, students. Yes, Ashok ji.